Imagine waking up tomorrow and finding out that the US dollar, the currency you've saved in, invested in, and trusted your entire life was no longer the world's money. It sounds impossible. The dollar is everywhere, in your pocket, in global trade, in oil contracts, in central bank reserves. We treat it as permanent, as natural, as inevitable. But here's the forgotten truth. The dollar wasn't always king. For a brief, dramatic period of history, another currency, one you rarely hear about today, was poised to take its place. It was stronger, more trusted, and for a time, the world truly believed it might replace the dollar as the backbone of global finance. So what was this currency? Why did it rise so high? And why, in the end, did it fail? Stay with me, because the story of the forgotten currency that almost replaced the dollar isn't just history, it's a warning about the fragile future of money. The dollar's throne was never guaranteed. To understand the mystery, we need to start with the simple assumption most people have, that the dollar's dominance was inevitable. It wasn't. After World War II, the dollar became the centerpiece of the Bretton Woods system, tied to gold, while other currencies tied to the dollar. America had 2/3 of the world's gold reserves and the strongest economy. On paper, the dollar looked unshakable, but dominance isn't permanent. Throughout history, financial power has shifted from Dutch guilders in the 1600s, to British pounds in the 1800s, to the US dollar after 1945, and in the decades after the war, one rival currency, the German mark, quietly began to challenge the dollar's supremacy. Chapter 1: Origins. A currency born from ruin. It's 1945. Germany is in ruins. Cities bombed to rubble. The Reichsmark worthless. Inflation rampant. People trading cigarettes and coffee on the black market. The Allies knew Germany needed a new start. In 1948, under Allied supervision, the Deutsche Mark, the German mark, was introduced. Overnight, the old currency was scrapped, and the new one launched with strict controls. At first, it was fragile, but Germany had two hidden advantages. 1. A disciplined central bank, the Bundesbank, designed to be independent from political meddling. 2. A culture traumatized by Weimar hyperinflation, deeply committed to monetary stability. The result? The Deutsche Mark became one of the most stable currencies in the world. Chapter 2: The Rise. The German economic miracle. In the 1950s and 60s, Germany shocked the world. From rubble, it rebuilt into an economic powerhouse. Factories rose. Exports surged. Productivity soared. The Wirtschaftswunder, the German economic miracle, was fueled by trust in the mark. While other currencies devalued, the mark held strong. Investors trusted it. Savers cherished it. Cause and effect was clear. Strong economy, stronger mark. Stronger mark, more foreign trust. More foreign trust, capital flowing into Germany. By the 1970s, cracks were showing in the dollar system. The US ran deficits. Inflation rose. Nixon cut the tie to gold in 1971. The dollar became fiat. And suddenly, global investors looked around for alternatives. They found the mark. Chapter 3: The Breaking Point. The dollar wobbles. 1970 seconds were brutal for the dollar. Oil shock sent prices soaring. Inflation hit double digits. Americans lost faith in their own money. Meanwhile, the Bundesbank held firm. It raised rates. It kept inflation low. The mark became the anti-dollar, the currency of discipline. By the 1980s, something remarkable happened. Central banks around the world started holding more Deutsche Marks in their reserves. In some years, the mark accounted for over 20% of global reserves, second only to the dollar. In trade too, the mark loomed large. In Europe, in Eastern markets, even in parts of Asia, contracts were settled in marks. For anyone tired of US instability, the mark was the safe haven. The world began asking a dangerous question. Could the German mark replace the dollar? Chapter 4: Fallout. Why the mark fell short. The mark was strong. Too strong. Germany's cautious monetary policy often created friction with its neighbors. European countries complained that German rates and German discipline dictated the entire continent's economy. But the real breaking point came from geopolitics. The US wasn't going to let its currency throne go easily. Washington pressured Germany to align with dollar policy, especially during the Cold War. America needed a stable global system, not rival poles of money, power. And here's the twist. The mark didn't fall because it was weak. It fell because it was too successful. By the 1990s, instead of replacing the dollar, the mark was folded into something larger, the euro. Germany agreed to sacrifice its beloved mark for European unity. The Bundesbank's culture of stability was embedded into the European Central Bank. The mark didn't die, it transformed. Chapter 5: Failed Fixes. The Euro's Promise and Struggles. The euro, launched in 1999, many believed it could finally rival the dollar. After all, the European Union had an economy nearly as large as the US. The euro inherited the credibility of the Deutsche Mark, plus the weight of France, Italy, and others. But here's the problem. The euro lacked one thing: the mark had cohesion. Germany had one economy, one central bank, one government. Europe had many. With crises like the Greek debt meltdown, the euro's cracks showed. Today, the euro still rivals the dollar in reserves and trade, but it never fully replaced it. The forgotten challenger, the Deutsche Mark, had more credibility on its own than the euro has ever achieved as a collective. Modern parallels. Could the dollar lose again? The story doesn't end there, because the question remains alive today. Could another currency replace the dollar? China is pushing the renminbi, signing oil contracts in yuan. Russia and others call for de-dollarization. Cryptocurrencies like Bitcoin propose a money outside state control entirely. And the data is striking. In 2000, the dollar made up 70% of global reserves. Today, it's closer to 58%. Central banks are diversifying into gold at the fastest pace in half a century. Trade blocs are experimenting with non-dollar settlements. History whispers, the dollar's throne is not eternal. And when we look back, the forgotten story of the Deutsche Mark is a reminder. Dominance can be lost. 1. Currency dominance is fragile. From the guilder to the pound, to the mark, no currency has held the crown forever. 2. Trust matters more than power. The Deutsche Mark won global respect not through military might, but through stability and discipline. 3. Sacrifices shape destiny. The mark might have replaced the dollar, but instead, it was sacrificed for the euro. So here's the warning. The dollar looks unshakable today, but so did the pound in 1900. So did the guilder in 1700. So did the mark in the 1980s. Every empire believes its money is eternal, until one day, it isn't. And the open question, what will replace the dollar when it fails? A Chinese yuan? A digital euro? A decentralized crypto? Or something entirely new? History doesn't give us the answer, but it gives us the pattern. If you found the story of the forgotten currency eye-opening, subscribe for more deep dives into the hidden histories of money, power, and trust. Because to understand where the dollar is headed, you have to remember the currency that almost replaced it.